I'm not one who believes in the conspiracy theories around precious metals in the long term. I've been in financial markets my whole life, and I know that in the short term, trading desks manipulate prices all the time. Markets as big as the US Treasury market, the Eurodollar market, and the Euro market are manipulated. So it would be very easy in the short term to manipulate the gold and the silver market. The idea that gold and silver prices were manipulated by mysterious forces in the period 1982 to 2022 fails to acknowledge the fact that gold was going down anyway. Why would you work really hard to manipulate the price of something lower when it was already going lower? Short-term manipulation, all the time. Now, the part of that that's important involves the paper trade, because here's the way short-term manipulation works. Somebody will, understanding that in gold and silver markets, the paper markets, the futures markets, often trade in a day 100 times the value of the gold and silver, set aside for good collateral for that trade. So people construct a book, either long or short, in the futures market, and then they act in the physical market overnight when the volumes are the least to change the price of gold in the futures market. Settle the trade, done. That's going to continue to happen. If you have physical volumes required to settle trades that are 1% of the value of the trades that take place daily, the temptation for manipulation is too high. It's gonna keep happening. In this circumstance, in the context of the audience, I was talking about gold producers, and I think the one I had particularly in mind was G mining, where you had a management team that had a specific skill set, and the task at hand was exactly suited to that skill set. Their skill set is constructing big mines in tropical high rainfall environments. They were constructing a big mine in a tropical high rainfall environment. Another example would be Lundin Gold. But even coming down the quality trail, the high quality developers and explorers have actually had a pretty good year. The caveat there is the high quality. The sort of penny dreadfuls, the $15 million market cap companies with realizable asset values of $1 million, didn't have a good year. They didn't deserve to have a good year. In fact, they didn't have much gold. They were merely looking for it. So the increase in the gold price wasn't of much use for them. But I think that in terms of the description of the type of stock that I was pointing out, it turned out to be true. I think it'll continue to turn out to be true. I think that we are still in a market where the market progression described by Lobo Tigre, which is to say the end of the Lassonde curve, when projects are through bankable feasibility study, they've obtained construction financing, when they're shovel ready, or better yet, shovel turned. That period, between that period in time and economic completion, seems to be the sweet spot in the market right now for juniors. I would hope that's the case, but I don't think it's going to happen. Human nature is what it is. You and I, Charlotte, have been trying for 10 years to teach people to be better investors. And they don't want to be. They don't want to think, they want to feel. They don't want to do the work that's necessary to separate, in movie parlance, the good, the bad, and the ugly. They just want to follow their emotions. And following your emotions doesn't work in this business. It's very strange, and I know you've noticed this because you've asked me questions that referred to it, at least elliptically. When people are investing in a narrative that's a 5-year narrative, and they have trauma holding stock over a long weekend, it means that their strategy and their tactics are at odds. And unfortunately, that is not how money's made. Money's made in this sector with a 2-year viewpoint, a 4-year viewpoint, a 5-year viewpoint. And unfortunately, most of the people on the exhibit floor below us, most of the attendees, have a 2-month back, a sort of a 2-month time frame. And it doesn't work. It just does not work. The consequence of that is that they fall for stories. They fall for narrative. They don't pay attention to whether or not that narrative is true. So they buy storytellers. Storytellers normally aren't good company builders. I really don't. I wish I did. Every pure play silver company that I know and like has obvious warts. I don't have a one-size-fits-all silver stock. Believe me, I wish I did. But there's warts on everything I see. I own a few juniors. I own Aya Silver, although I think based on current production it's overpriced. I own Abra Silver because I like the exploration progress. I like Pan American, although they aren't predominantly a silver-centric company anymore, but I like the newfound production efficiencies that they're enjoying across a range of assets. I like the fact that they sold some residual assets and cleaned up their balance sheet. There's a few things I like, but there's nothing that I have the courage to say to Charlotte McLeod in front of 30,000 people, you should buy this. I don't have one of those. Well, that's attractive to me. I notice postings on social media where people who have uranium as part of their handle are saying, I sold my uranium stocks. The game's over. That's lovely. It truly is lovely. When the hot money goes away, it means that sanity is reflecting to the sector. Uranium poodle, whatever these posters are. The fact that these people are now going to disgrace some of their commodity, I think is a very, very good thing. But I do think the fundamentals are improving. Whenever you and I have talked for the last 4 or 5 years, I said the real near-term catalyst was the resumption of Japanese production. It's happening. The material that was supply is now material held for fuel. Very, very, very bullish sign. There are also, the thing that excites the market is interesting because it's not going to matter for 6 or 7 years. What people are talking about now is data centers. Those facilities need to be permitted, financed, created. It will impact uranium demand 8 years out, 10 years out, no doubt whatsoever. What matters right now is Chinese new construction, not progressing with shutdowns in Western Europe and the United States, but rather extending lives, and the pace of Japanese restarts. The thing that's happened very recently that's very bullish for uranium is the unsuccessful restart of Inkai, which I had believed to be the best uranium market in the world, best uranium mine in the world. At the time that shut down, that was the lowest cost producer on the globe. Because of many things, including an unavailability of sulfuric acid in Kazakhstan, that mine hasn't resumed production anywhere near at the rate that I thought it would. So there's 10 million pounds in reduced supply in 2025, and the spot market is already pretty skinny. Another thing that people don't realize, and you and I have talked about this in the past, is that the available for sale inventory in the spot market was reduced by my former employer, Sprott, by about 65 million pounds. Some days, the dollar volume in the Sprott Physical Uranium Trust is bigger than the dollar volume in the spot market, which is to say that the spot market has become the Sprott market. And that points to the fact that there is a growing unavailability of supply, which I believe over the next 5 years will force both producers and consumers to meet each other in the term market. And that is ultimately healthier for both parties. I think you have to concentrate, but whenever I see hate in social media, I get attracted. And I'm seeing hate in uranium. When I talk about fundamentals around next gen or around fission or around Paladin or around Lotus, there's an immediate outpouring of social media comment from people who 7 years ago couldn't spell uranium, and they don't dispute any of the facts that I brought up. They just say uranium's junk. In other words, they respond emotionally. I love that. I love that. In my life, from a financial point of view, when I'm hated, I'm about to be rich. I have Denison as a 5. I own a lot of 5s myself. What it means is no immediate catalyst. The good news around Denison is that they're sort of the go-to name in the Athabasca Basin for the second-tier uranium companies. When generalist investors come into the space, they're going to look at Denison. They also have a wonderful database. They've been in the business for 70 years. They're not Johnny-come-latelys. And they have a permitted mill. Those permits are hard to get. A wonderful land base. The thing that makes me nervous about them is their near-term value proposition is establishing in situ recovery technique, but not on surface in sandstones as a roll front, but rather deep sandstones. This has never been done before. If it works, it's a true game changer. But I caveat this by saying, if it's worked, it's never worked before. So to me, it's a science project. I've spent 10 or 12 hours trying to understand it. I can't understand it, so I don't know how to value it. I have opinions about the supply side of copper, which I think is extremely attractive. I don't have much of an opinion in the near term about the interplay between supply and demand. I have zero doubt that 5 years from now, we're going to have supply deficits because we needed to be investing to cure those supply deficits 25 years ago, and we didn't. I've said this before, and it's self-deprecating humor, but if your audience looks at me, they see a metaphor for a copper mine. 71 years of age, fat, bald, past his prime. When you look at the mines worldwide that we derive our copper from, Chuquicamata is 115, Bingham Canyon's 165. The newcomers, Grasberg, are 60 years old, Escondida's 45 years old. I mean, these things are past their prime, and we need to find and put into production one big mine, big mine every year, and we're not doing it. In fact, we're falling further behind. There's a wonderful copper deposit in the U.S. called Resolution, 1.2 billion tons, so a supergiant. 1.5% copper, 3 times the average mine grade worldwide. It's been in permitting 26 years. So, zero doubt over the next 5 years we have production shortfalls. What happens to the price between 2025 and 2030? I don't know. Is there a global recession? I don't know. Now,